All right, so what is gonna happen to rental rates in 2023? My name is Jim Fong. I'm an investor and realtor with Urban Nest Realty in Las Vegas, and I help investors like you identify investment opportunities. Let's look at the housing market real quick and just put a little background to things, all right? So we had a really hot seller's market, low supply, high demand. It was a crazy real estate market. Prices just went through the roof, but now more recently, interest rates started going up significantly, all right? With the interest rates going up at such a fast rate, it's priced a lot of buyers out of the market, all right? So people that could afford to buy a house last year or earlier this year no longer can buy a house now. They've been priced out because of the interest rates, all right? So what that actually does, it's lowered the demand in the home buying market, right? But what does that do for renters, right? Because that buyer that's priced out of the market right now still needs a place to live. They're not a buyer anymore. Now they're gonna be a renter, all right? So as we see more buyers being priced out of this market, you're gonna see a higher demand for rentals, right? And furthermore, as we see these interest rates increase, we're seeing a lot of sellers, many of which are landlords, rushing to put their home on the market. Oh, I gotta sell my house now while the prices are still pretty high, right? So they're cashing out. So you could potentially see a huge increase in demand on rentals and then a drop in supply at the same time too. So if that were to happen in 2023, I think rent prices would go up, okay? I mean, that's a very likely scenario right there. Rental prices generally go up when it costs more to own a home. All right, so if sale prices start coming down, mortgage rates maybe adjust a little bit, and your mortgage payment is, comes down a little bit, you're gonna see rents go up, all right? That's usually the kind of the breaking point really for a lot of people is like, if I can own a house and it's cheaper than paying rent, I'm gonna try to buy a house, all right? So there's gonna be some adjusting in this changing market right now. All right, so how does that relate to you possibly? If you're a renter, what can you expect to see? Let's go back a little bit and talk about this, all right? We're gonna use the whole supply and demand thing here again too. And that is rents were at their lowest in the fall of 2020, all right? So if you go back then, that was the year of COVID, the pandemic. So everyone was stuck at home. No one was out spending money. Everyone's locked down. And, people weren't trying to move. There was a pandemic happening, we're staying in place, right? People were not allowed to be evicted, right? So everyone was staying in place, right? That's when we saw the very lowest in rent prices right then, all right? Because there was not a lot of demand. People didn't want to move a lot, right? And there was a lot of supply, especially if you were building an apartment complex and it wasn't completed until like 2020, we'll say, you're in a lot of trouble. You spent all that money leading up to it that year. You need to get people in your building and start paying rent, right? Well, that was the absolute lowest, all right? But then you go into the end of 2020 and then you go into 2021 where people started learning about, hey, I can work from home now. I can work remotely now. Hey, we can learn how to live with COVID, right? People are out again spending money. People wanted to really enjoy themselves because they were kind of locked at home in 2020. That's when you saw rents just skyrocket through the roof, all right? I mean, an example is, I know somebody that was paying somewhere around $1,100 at the end of 2020, and by the lease renewal date, 1 year later, they were asking for $1,800, all right? So it was a huge increase at a really fast pace, all right? That could possibly happen if you have really high demand and low inventory for rentals, all right? So that's a possible scenario for you. Say you're an investor though, all right? I'll give you an example of a property in my portfolio, all right? One of my first properties I bought, for a rental. When I first bought it, the rent I was collecting on it was only $1,100 a month, all right? My mortgage payment was $900 a month, all right? So after, all my fees and, just expenses as a landlord, I was really just breaking even for the most part, and I was not making much money at all. Why would anybody be in that situation, all right? Well, it's because real estate is kind of a long-term investment, for me at least, all right? Today, I'm collecting $2,000 a month rent on that property now. My tenants over the years have actually paid off my mortgage for me, so I owe nothing on it now. So I don't have a mortgage payment, and now I'm collecting $2,000 a month, all right? So yeah, that's a big difference from when I was just breaking even till right now, but you gotta realize that real estate investing, especially buying and holding like this, is a long-term game. It's not 1 year, 2 years, you know, you gotta think 5 years, 10 years, 15 years in these terms, all right? I'm curious what your thoughts on this, you know, depending on what position you're in. Are you a potential buyer, renter, investor, property owner, whatever? I want to, you know, drop me a comment below. Tell me what your thoughts are, because every market's different, you know. I mean, I'm in Las Vegas and I'm just speaking from my personal experience, but I'd love to hear what you have to say about this. And, you know, if you like videos like this, you know, like and subscribe, and thanks for watching this, and check out my other videos. Thanks.